Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is Afrida Cahyani. I am a final year accounting student at State University of Jakarta. Now, I would like to present my final research about analysis of financial ratio for hospitals that list on the Indonesia Stock Exchange during the COVID-19 pandemics. Okay, first, we start from Chapter 1, Introduction. This part includes the first research background, the second formulation of the problem, and the last is research purposes. The research background starts from the emergence of COVID in early 2020 and the virus spread to become pandemic. And then the emergence of large-scale restrictive regulation was made by Indonesian government. The existence of restriction makes it difficult for business sector to operate, but the performance of healthcare sector has increased due to the increasement in the type of hospital services. So, the effect of increasing healthcare sector performance experienced by private hospitals that list on the IDX Indonesia. And then the formulation of the problem. First, how was the financial performance of hospital listed on the IDX during COVID-19 pandemic using profitability ratios? The second, how was the financial performance of hospitals that listed on the IDX during COVID-19 using liquidity ratios? And the third, the last, how was the financial performance of hospital that list on the IDX during COVID-19 pandemic using solvency ratios? And the next part is research purpose. There is 3 research purposes for this research. First, for researcher, develop the ability of writers, especially on the topic of financial statement analysis. And the second, for Faculty of Ekonomi, State University of Jakarta, to become a reference for students, lecturers, and all parties who read and doing research. And the last, for unit of analysis, to become input for the improvement and development of the analysis unit, especially through the present financial analysis. Okay, next for the Chapter 2, Theoretical Study and Research Methodology. This part includes 3. There is research purpose, theoretical study, and research methodology. Okay, we move to the first point, theoretical study. There is 3 parts in this point. First, hospitals. According to the regulation of Minister of Health of Republic Indonesia, number 3, 2020, a hospital is a health service institution that organizes full individual health services that provide inpatient services. And the second point, financial reports. Financial reports are reports that describe the financial condition of a business entity at a specific time. Company financial reports can be made based on the period, namely 3 months, 4 months, 6 months, or 1 year depending on the management policy of an entity. It based of Dr. Kosmir in 2019. And the third point, financial statement analysis. Financial statement analysis has a definition, namely the application of analytical techniques to financial reports that relate data to produce estimates and conclusions that are useful in business analysis. It based on Subramaniam on 2014. Next, to the theoretical study. Analysis of financial statements using financial ratios has revealed advantages, such as being easier to interpret and helping company management to find out the financial position of other companies. There are various types of financial ratios based on the 2022 Health Economics module compiled by the Ministry of Health of the Republic of Indonesia. And this is the value that for profitability ratio. The first is net profit margin. And the second is return on asset, and third is return on equity. For net profit margin, we divide the net income with income, and for return on asset, we divide the total asset with net income, and the return on equity, we divide total equity with net income. And the next is liquidity ratio. There is two ratio. First is current ratio and the second is days cash on hand. For the current ratio, we divide the current asset with current liability, and the days cash on hand, we divide the cash and equivalent with expense minus depreciation and divide for 365 days. And the last is solvency ratio. There is three ratio: debt to asset ratio, debt to equity ratio, and times interest earned ratio. For the DAR, we divide total liability with total asset, and for DER, we divide total liability with total equity, and for TIE, we divide EBIT with interest expense. Next part is framework of thinking. We start from the financial statement. There's a care, heal, prim, same, SRAJ, silo, and others. And the second, calculation of financial ratios, such as profitability ratios, liquidity ratios, and solvency ratios. And the third, calculation of analysis. And the fourth is submission of conclusion. The next part is research methodology. In this part, there are 3 points. First point, place and time. This research was conducted in the healthcare subsector, which is engaged in the hospital industry, and it lists on the Indonesia Stock Exchange and has issued quarterly reports for 2020 until 2022. The time of the research was carried out in September 2022 until December 2022. The second point, research method. In this study, I use a quantitative descriptive method, namely research that intends to describe an objective description of the situation using numbers starting from data collection, data interpretation, and appearance and results. And the last point, data technique collection. I collect data by library research with searching for reference books and scientific journals in libraries and internet. In addition, in this study, I collected data from financial statement of 7 private hospital issuers that list on IDX from 2020 until 2022. And this is the additional information for the 7 issuer. The first, Metro Healthcare Indonesia with a care, and the second, Medica Loka Ermina with a code HEAL, and the third, Mitra Keluarga Karya Sehat with a code MIKA, and fourth, Royal Prima with a code PRIM. The fifth, Sarana Meditama Metropolitan with a code SAME, and the sixth, Siloam International Hospitals with a code SILO, and the last, Sejahtera Raya Anugerah Jaya with a code SRAJ. Okay, next to the chapter 3, there is a discussion. In this part, we have a 2 point. First, case analysis, and the second, case description. And the first point is case description. The health sector is at the forefront of handling the COVID-19 pandemic. The number of COVID-19 patients continues to increase, so that private hospitals, as one of the health service providers, also maximize their performance in serving patients during the COVID-19 pandemics. The improved performance at the hospital also affected the financial condition of the hospital, especially for large hospital issuers that list on the Indonesia Stock Exchange. Now we going to the case analysis part. First, about profitability ratio. Okay, now we are going to the part of case analysis. The first analysis is about profitability ratio. This is net profit margin for 2020 period. The highest company is Mika. Issuer Mika has the highest percentage coming from medical equipment, inpatient and outpatient services. And the second is same is the lowest point. Some issuers have not been able to generate profits throughout the 2020 period. Same has high medical support costs and fixed assets. As you can see, the graphic of net profit margin shows that same is the lowest point with net profit margin. In the next period, net profit margin has getting better in 2021. As you can see on the graphic, there are so much company that have a percentage higher than the average industry. And the higher is Mika, and the highest has inpatient income in the form of medicines and medical equipment, which is a large amount this year and is greater than the previous period. And lowest is a care, because they have large costs to meet the benefits and the salaries of health workers. And the next graphic is for 2022 period. We have a Mika for the highest percentage. Mika has inpatient income in the form of medicines and medical equipment, which is a large amount this year and is greater than the previous period. And the lowest is care, because care suffered a loss with the lowest percentage because it had increased financial costs such as interest on notes payable, interest on bank loans, and the bank administration fees. Okay, and the next ratio is return on asset. For the 2020 period, Mika has increased short-term investment and has a number of receivables from third parties, which also add the profit in the fourth quarter. As we can see, Mika have the highest value of return on asset. And Hill also had short-term financial investment, which increased in the fourth quarter, and a number of cash transactions increased so that Hill has bigger cash. But same is the lowest, because same issuers suffer a lot of asset impairment losses. In the next period, return on asset, Mika still have the highest score, the highest percentage. Mika has increased asset in the form of software and software under development, which increased revenue from medical support services. And care is the lowest, because care hasn't been able to reach the industry average in all quarterly periods due to the large amount of assets. Care hasn't been able to generate substantial revenues. And in the last period, in 2022, return on asset, the highest score is Mika and Hill. Only Isor, Hill, and Mika are able to exceed the industry average. And another I highlight is Silo. Silo exceeding the industry average due to increased revenue. And we have a lowest point in this period, Care, having the lowest percentage of -2% with total asset greater than the 2021 period. Care is still not optimal in using its asset. Okay, next ratio, it is return on equity or ROE. In the early period is 2020. As we can see, Hill and Mika use their capital efficiently and are able to generate profits. Hill achieved the highest ROE result due to the additional amount of paid-in capital and capital from non-controlling interest. But same has the lowest percentage in 2020 experience are increase in net income, but same had large financial costs and impairment losses on assets resulting in losses. The next period, return on equity As we can see on the graphic, Hill and Mika is the highest percentage. Hill and Mika able to maximize the capital they have throughout 2021 by showing the highest percentage, especially in the fourth quarter. And the lowest is Care. Care tends to be stable and experience an increase in total equity in the 2021 period. However, Care's percentage is still below the industry average. This happened because the increase in profits in this period was accompanied by an increase in expense. In the next period is return on equity 2020-22. As we can see on the graphic, Mika and Hill is still the highest percentage. Mika experienced a slight decrease in the amount of equity in this period, but still managed to have a high percentage because its revenue always increased from the first to the third quarter. But Care suffered loss in this period. The amount of Care's equity didn't change much in each period. This loss was caused by the large financial and operating expense owned by Care, especially for the salaries and benefit of health workers. Okay, and the next part is liquidity ratio. Liquidity ratio has two kind of ratio. The first is current ratio. As you can see, this is the graphic of current ratio in 2020 of Care, Hill, Mika, Prim, Same, Silo, and SRAJ. In the graphic, Care and Mika have the highest percentage. Care is considered capable of paying off their current debts because their current assets are far greater than their current liabilities. But Same is the lowest point. The amount of current liabilities that is greater than current assets shows that Same is in a bad condition. Current liabilities such as accrued expense, tax payable, rent payable, and trade payables to third parties owned by Same increase every quarter. In the next period of current ratio, Care has decreased but is still with the highest number. Care experienced as a decrease to the short-term investment withdrawals in the second quarter of 2021. In the fourth quarter, Care invested again so that the number of assets increased again. And SRJ is the lowest value in this period. SRAJ's current assets show an increase, but in this period, SRAJ has debt to related parties in a large amount, especially in the third and fourth quarters. In 2022, Care still have the highest percentage. Care has the highest percentage, but Care has experienced a decrease in the current assets accompanied by an increase in short-term debt to banks. And the lowest is SRAJ. SRAJ experienced a decrease in current assets, especially in the amount of cash and cash equivalents. SRAJ's short-term liabilities are slowly decreasing. And the next liability ratio is days cash on hand ratio. As we can see in 2020, Care have the highest percentage. Care can survive for 1,883 days only by using cash in carrying out hospital operations. Easier Care also has the highest return on a quarterly basis. And the lowest is Same that can last 6 days using their cash in the third quarter. The amount of cash owned by Same is much smaller than the total of operating expense and depreciation. The next period, Same is the highest percentage. Same able to survive for more than 3,000 days by using their cash for operational activities. In the previous period, SAM had the lowest value, but in this period, it became the highest due to the increased amount of cash from financing activities in the form of issuing shares. And the lowest is PRIM. PRIM increase operating expense and depreciation make PRIM show a small value. In addition, cash owned by PRIM is used for payments to suppliers in a large amounts. And in the last period of days cash on hand ratio, CARE, able to last up to more than 1,000 days on their cash. In addition, in the first quarter, operating expense and depreciation were smaller than the previous period. And the lowest is zero. The amount of cash decreased and operating expense increased to finance employee salaries and welfare. This is related to the participation of health workers, which is very important when in the pandemic of COVID-19. And the third ratio is solvency ratio. There are three ratios in solvency ratio. First is debt to asset ratio in 2020. As we can see, SAM is the highest percentage from entire issuers. SAM increase in the amount of debt, especially in lease payables, accrued expense, long-term bond loans, and tax payables. This shows that SAM is in a bad position because in 2020, SAM shows net profit margins and ROA with minus number. And the next is CARE. CARE is the lowest. This is a good result because CARE has low return on asset results, so that the financial condition will be unfavorable if CARE has a lot of loans. In the next period, SRAJ has the highest percentage in every quarter. This shows that almost half of RSAJ's business activities are financed by debt. SRAJ users have return on asset result and net profit margin below the industry average, so this condition is not good. And CARE is the lowest. CARE has the lowest result in the first quarter to the third quarter and then experience an increase in debt to asset ratio in the fourth quarter. And the last period, SRAJ still have the highest point. Loss experienced by SRAJ and the number of return on asset which decreased in 2022 made SRAJ issuers have large debts to carry out hospital operations. And PRIM is not having a large amount of debt is a good management decision because PRIM's return on asset results are below in the industry average, and PRIM's net profit has decreased in this period. Okay, next ratio is debt to equity ratio. In 2020, we have SAM and SRAJ making all of their capital as a collateral for their debts at the start of the COVID-19 pandemic. The loss experienced by these two issuers forced them to use their capital as collateral for loans. The return on equity percentage result also shows figure below the industry average. And we have CARE and PRIM. This is a good condition because these two issuers use their capital as collateral with a small percentage. In addition, their return on equity result and net profit margins are also above in the industry average. Next is debt to equity ratio in 2021. CARES have a lowest percentage. CARES return on equity percentage is below the industry average with a low percentage of debt to equity ratio. It will make it easier for CARE users to maintain the trust of debtors and pay off their debts. And the next is SRAJ. In this period, SRAJ was able to generate profits and an increased return on equity percentage. But this condition was still not good because the large amount of capital was used as collateral to pay off the debts. And in the next period, 2022, Care, Mika, Prim, Same, and Silo were below the industry average during the second quarter of 2022. It means during the COVID-19 pandemic, their hospital used very little of their capital as a collateral for debt. And Hill and SRAJ used a lot of their capital as collateral for debt during the COVID-19 pandemic and have not been able to reduce their debt to equity ratio percentage. And the last solvency ratio is time interest earned. In the early period, 2020, we can see that Mika has the highest value. Mika's income was able to pay off the interest cost it had during the second quarter to the fourth quarter of 2020. And we have Care and SRAJ have negative returns and will have difficulty to paying the interest costs they have in the 2020 period. SRAJ has the lowest time interest earned value, especially in the second quarter when the COVID-19 virus starts to spread. SRAJ has quite large direct expense, especially for medicines and doctor supplies, so it cannot survive. And the next is time interest earned in 2021. We can see Mika has the highest percentage. Mika's income before interest and tax, or we can say EBIT, is able to cover their interest costs due to the large amount. And Prim, this is the highlight of the period because Prim in this period there are no interest bearing loans and no loans to banks, so the time interest ratio cannot be calculated with Prim in this period. And the last period of time interest earned is same like the last year. Prim in the third quarter had the highest yield as it had few interest loans. But in quarter 1 and quarter 2, Prim still has no debts. And Care shows that in the quarterly period of 2022 produced a minus earning before interest and tax. The end of this presentation is chapter 4, include conclusion and recommendation. The first is conclusion. The first conclusion is the profitability ratio shows that increasing the net profit of most listed hospitals can increase the average number of the industry. Profitability ratio analysis using 3 ratios, namely net profit margin, return on asset, and return on equity, shows that the highest industry average occurs in the quarterly period in 2021, where no issuers show negative results, so that in 2021 all issuers are able to generate profits. And the next is the overall liquidity ratio shows poor results because most companies have results below the industry average. The industry average, which was very high for all quarterly periods in 2020 and 2021 and also 2022, was influenced by the most dominant issuers, namely those with very low total liabilities and larger amounts of cash compared to most other issuers. And the last conclusion, the solvency ratio shows that the hospital issuers are in safe condition, but here, Same, Silo, and SRAJ finance their assets with their debt in a percentage above the industry average. In addition, issuers here, same, and SRAJ use their capital as collateral with percentage above the industry average. This large percentage can risk making hospital issuers have difficulty paying their debt. In addition, as a whole, issuers of private hospitals have been able to cover their interest costs with the profits they generate, but most of them are still below the industry average. And the last part is recommendation. And first, for researcher, to make updates relate to the analysis unit studied and determine other indicator in measuring financial performance. And the second, for Faculty of Ekonomi, State University of Jakarta, it can be a reference for Jakarta State University in conducting further research on private hospitals in Indonesia. And the last, for analysis unit, it is beneficial for management so that the financial condition of the hospital issuer shows a better condition. Okay, that was the last part of my presentation. I hope it can help you and this research will be beneficial for others. My name is Afrida Cahyani. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.